Hello, and welcome to my next NAP. NAP stands for Nonprofit Auditor Points, and I'm your nonprofit auditor. My name is Irina Ryshkova, and I designed these NAPs to provide some hopefully useful information to nonprofits, executive teams, management teams, board of the directors related to audit, accounting, and finances. This information is not authoritative, it's just me sharing my experience as an auditor. It's going to be a series of 3 videos where I will be talking about what nonprofits can do in order to prepare for the audit better. And hopefully you will find some useful nuggets that your nonprofit can use. Okay, so this is video number 1. Let's start. First and foremost, if your nonprofit have been audited last year, your step number 1 should be pulling prior year audit report, opening it, and take a look on the net assets equity section. It's on the balance sheet total that includes with donor restrictions, without donor restrictions, all together. One number. That's your last year net assets or equity. Then open your accounting software, whether it's QuickBooks, Xero, Sage, so forth. You open it and run last year balance sheet, assuming you're trying to prepare for the audit ended December 31st, 2024. Therefore, you will open balance sheet as of December 31st, 2023, last year, and take a look at the total net assets in your accounting software. Compare this number to the audit report. These numbers have to be the same. It means that you did not accidentally make any changes after the audit was done. It's very important. If your number changed for whatever reason, you need to do some research. What was changed? Hopefully, if it's not material change, it's up to you and your auditor if you need to investigate. But if it's a material change, you really need to make sure that you understand what was changed. So that's number 1. Another reason why net assets last year net assets, which is December 31st, 2023, might not agree to the audit report, it's because your accounting team forgot to book some adjusting entries that auditor prepared. Or maybe they accidentally record them incorrectly. Maybe they change debits and credits. So the next step would be, if your net assets do not agree with the audit report, pull the list of the adjusting entries that auditor provided you at the end of last year audit and make sure that those entries properly recorded. Also, these entries is a great reminder what was adjusted last year. Take these entries and make sure that no same mistakes was done this year. So once again, step number 1, you will pull last year audit report. You will compare last year net assets on a balance sheet when you run it's right now from prior year with the audit report. They have to agree. If they don't agree, you need to investigate. Also, you will pull the list of adjusting journal entries from last year and review what adjustments auditor proposed and make sure that you do not do the same mistakes this year, which is December 31st, 2024. Next step, if your auditor gave you the letter of deficiencies from last year or recommendation letter, it we call sometimes letter of significant deficiencies, material weaknesses, or just recommendation letter, pull that letter. Make sure that you remind yourself what findings the auditor recommended from last year and you address them. I would recommend that not even just do it in one sitting. Pull that letter, put it in your desk or save it on a desktop and go back to that letter, because that letter it's like a red light that you need to consider during the whole process when you will be closing books. Therefore, you will start with last year audit report, last year recommendation letter, and last year adjusting journal entries. 80% of mistakes we as auditor find nonprofits carry over from one year to another year to another year. So therefore, it's very good idea to remind what was done incorrectly last year, to refresh your memory so you can do it correctly this year. Your auditor would be happy and you would not worry. You will bravely tell your auditor you addressed all the points that auditor pointed last year. So it's a great practice to do that. And last recommendation that I will tell you in this video is to run either trial balance, if your system allows you to run comparative trial balance last year and current year. So if you're trying to prepare for December 31st, 2024, run trial balance for 2 years comparable. December 31st, 2023 and December 31st, 2024. If your software does not allow to run the trial balance comparable, but it should allow to run balance sheet and income statement, then do run balance sheet comparable and income statement. And if you see, and preferably do it by accounts. I know some software summarizes, like put all cash together, for example, even if there were like 20 cash accounts, it just lump sums and put one number. Run it by general ledger account. So for each account, separate line. And if you run them comparable, take a look if there's any accounts that have zero balance this year, but last year they had a balance. This is your red flag. Make sure that you understand why this balance is zero this year. And also take a look at accounts that have exactly the same balances as last year, which can happen, but it's very unusual. So once again, you run comparable balance sheet last year and current year, comparable income statement last year and this year, current year, and see if there is any accounts that have zero balance this year, but last year they had a balance. Make sure you understand and you're pretty sure that it should be zero. And see if there's any accounts that had exactly the same balance last year and current year. And if this is make sure that you understand and you approve that it's correct if the balance have not changed. So this is where majority of mistakes sit. Again, you need to understand your financials just to make sure that you're okay with the zero and not zero and the same amounts. So this is the beginning step for you to start closing year end and preparing for the audit. If you do that, I guarantee you that you will already catch 80% of mistakes. The rest 20% we will discuss in the next snap. Thank you so much and please see me for the next snap. Appreciate your time and thank you and looking forward to see you next snap.